Ruggers are going to rug. It's the way of life.
When I was at the CFTC, we prosecuted and filed complaints and had settlements on Ponzi schemes every week.
All you need to do is slap labs at the end of your name, and then you're sufficiently decentralized. That's all you need to do. Well, ladies and gentlemen, welcome to The Scoop. I'm your host, Frank Chaparro, editor-at-large at The Block, and we have a very exciting episode of the show for you today. Joining us on the other side of the mic is Brian Quintenz, former commissioner of the U.S. Commodities Futures Trading Commission and head of policy at a16z's. It's been an interesting time in the market, especially from a regulatory perspective, and so I'm sure you're quite busy there at the firm. Give us a temperature check of everything at the intersection of policy, regulation, and crypto from your seat.
Yeah, thanks, Frank. First of all, it's great to be with you. That's a big question. I mean, I think let's start off with the fact that as we all know that have been involved in this ecosystem for a long time, there is a lack of regulatory clarity as to how this industry, its products, tokens, decentralization is or should be treated under various regulations and laws that are already on the books and that have been on the books for decades, 70, 80 years. And because of that lack of clarity, there is no set of principles, for which founders can build to. Those that are interested in exploring the benefits of this technology can have as a safe guide. And then we have on top of that a regulator at the SEC that is taking a very hostile view towards the technology generally, without issuing any updated guidance that can allow it to actually survive within its regulatory rulebook that has now created an opening, the opportunity, or forced, as a forcing function, Congress to get involved to try to clarify what the jurisdiction of the regulatory perimeter actually is, how this technology can be responsibly used, and to ultimately set some guardrails that embrace strong consumer protection, promote the idea of decentralization, and embrace innovation.
Yeah, there's definitely a lot of ambiguity there. Where do you think the line will ultimately be drawn in terms of which assets are securities, which assets aren't? The chair of the SEC has once said, or said a few years ago, that 3/4 of the market were not securities. Now it seems like 99.99% of assets in this market are securities. Is there, could we shake out at 50-50? What do you think there?
Well, I mean, I don't think it makes. I take your point. I don't think it makes a lot of sense to just compromise on, percentage thresholds of the market and just, try to placate individual jurisdictional issues. I think, good law is based off of good principles, and good regulation implements good law through thoughtful nuance, right? And so the principles that I think, we and I think the community really embrace around what things represent securities and security interests through either investment contracts or other, defined forms of securities versus things that are not securities and are more purely commodities or that have use cases, right? Is the idea of, the primary value of that asset or instrument being derived from a managerial team, and how that centralized managerial team develops and creates the value and the expectation of future value solely from its own efforts, from its managerial efforts. And that's an important concept, because if there is a centralized management team and there is an investment of funds in that centralized management team, they control the investment of funds. They have asymmetric information compared to their investors. They have conflicts of interest. And that's exactly, what the securities laws are meant to protect, investors from being abused by. And so as we look at, the debate generally, as we look at the lack of clarity by the SEC, it's been 4 years since they've issued any guidance on this topic, with the last guidance in 2019 focusing on these exact issues, focusing on how decentralization obviates risks that legacy securities laws were designed, to address. That's where you see Congress now stepping in appropriately, in my view, given the actions, by the SEC and trying to expand, its purview into innovative technology that does not necessarily fit into its rulebook. You see Congress addressing these issues by focusing on that concept of decentralization, where there is a lack of asymmetric information between a development team, a product, or the investing or consuming public. And we think that's an important marker because we view the underlying benefit of this technology is decentralization. Decentralization is the key. That is the thing that this has all unlocked. And that is also something that needs to be recognized and promoted. And the regimes that get that right, the jurisdictional regulatory regimes that focus on that and understand that nuance, are going to be the ones that capture this innovation in their jurisdictions going forward that services the rest of the world.
It might be more productive to have or to implement a Web3 version of the Howey test in which something like decentralization is part of that litmus test. I'm curious, you mentioned the word nuance, which I think is a core pillar of this entire conversation. And there isn't a lot of nuance, at least from the current administration at the SEC, in my opinion, because you could have a situation, and correct me if I'm wrong, where maybe the agency could say, okay, if you're a crypto company, we understand that you can't really, copy paste what exists in security laws for crypto projects, but here's maybe a third way or an avenue by which you could enter our jurisdiction. So in a sense, the agency would get its cake and eat it too. You get them to sort of be within the parameters of U.S. securities laws, whilst also not just completely pushing them out, because you can't really, as a crypto project, let's say Frank Coin or Brian Coin, if it's a decentralized sort of organization, who's filing those sort of documents around, what would be the S1 for these projects? It's sort of impossible. So I guess the question is, without pontificating too much, is why don't you think the agency would try to compromise and figure out some sort of third way when it clearly is pretty impossible to, at least from a crypto project, a truly decentralized one, go through the standard process of, filing S1 and listing on an exchange as one would do if they were a U.S. listed equity?
Yeah. So, I think, first of all, you're exactly right. There are available avenues, to the SEC in the form of legislative powers that have been given to it, powers given to it through legislation that allow the SEC to exempt entities or processes from their existing rules, create exemptive relief through things like either rules or no action letters. A no action letter is something that a division of an agency would issue to a firm, or possibly in general, in rarer cases, in general applicability, where it says, if something meets these criteria, we as a division of the SEC or of an agency will not recommend an enforcement proceeding to the enforcement division against that project or issue or industry or so-and-so. And that happens all the time. There are thousands of no action letters that the SEC, the CFTC, and other regulators issue to address the very thing that you're discussing, which is nuance, which is where new things are created or special circumstances evolve that don't fit into the existing rule book, where it doesn't necessarily make sense to reopen up the entire discussion and rewrite that rule. for that one specific issue. So there are available avenues. There are available avenues through rulemaking that don't involve exemptive relief. And the point you make is an important one, especially when it comes to the current discussion around special purpose broker dealers and how anyone that gets that registration is going to be able to actually list, what we would normally think of as crypto products or tokens, because in order for those, to be listed, they would need exemptive relief to satisfy the reporting requirements, the registration requirements, and all the things that you describe. Otherwise, Bitcoin, Ether, and any other token, that we view in the marketplace now that is decentralized will not be able to meet those thresholds. And we've already heard that in congressional testimony that the firm that's received, this special purpose broker-dealer license has said that they are not receiving any special exemptive relief. So, to me, it's hard to answer what the real motivations are. I have some suspicions, but I don't think they're really productive. The point is that nothing productive is actually happening, and Congress needs to show the way by creating the framework that the SEC is refusing, to contemplate.
Yeah, I haven't touched base with that team you're referring to. Is it Promethean or Prometheus? It doesn't matter. But what I don't understand about Prometheum, okay, I think I talked about them on our last show and just butchered the name. So with all due respect to that team, the Kaplans, what I don't understand about that is how would that work? So even if you have this special purpose broker-dealer, great, you can trade cryptocurrencies that have been deemed securities by the SEC, but if those, what will you trade if none of those projects register? It's like you're in a no man's land of assets. It doesn't really make sense. You wouldn't trade Bitcoin because that'd be a commodity, but let's say Polygon, which was deemed a security, Matic, by the SEC in its suits against Binance and Coinbase. If Polygon's team of developers or whatever it is don't register, then would that be something that special purpose broker dealer could trade? I don't really understand it.
Well, so I think there are a number of questions there. I think the broadest question is that the broadest issue is that there are a lot of questions. I think there are questions about the firm. There are questions about its relationship to Chinese entities. There are questions about its service providers and their compliance history. There's a question about whether or not they actually have a business model that is viable in this space. I think really before the last month or two, no one's ever heard of this firm when there are very large legacy financial institutions that I think have demonstrated an interest in this kind of license and product offering. And then to your point, there are a lot of questions around how this would actually work in substance, and if it doesn't necessarily allow for this solution to facilitate the trading or access to the traditional token marketplace, then it's not really a solution. It's more of a tactic. And if you have an agency that's engaging in tactics in response to Congress or political dialogue or PR purposes, I think you have something that's pretty rotten at the center of that organization that is not necessarily undertaking its legitimate governmental duty in enforcing laws in a fair, transparent, and compliant way.
No, I think that's well said. It's very confusing, and they haven't done a good job answering a lot of these questions. Okay, so let's talk a little bit about your job, head of policy. at a16z. What does that look like aside from just descending upon the hill and trying to convince folks that this is an industry worth paying attention to and providing clarity to?
Well, so I mean, I think it's much bigger than just going up and taking meetings, and we have a full team from a very robust and expert, maybe absolutely world class legal team, regulatory team, government affairs team, and then me doing policy work. I think broadly speaking, it's how to think about and develop legislative or regulatory frameworks that can be principles based, but also understand nuance. Right? How do you create a system that's flexible, that isn't overly prescriptive, that allows for innovation in the future, that doesn't preclude innovation, that and that focuses on the right things. And I think that's where we have come down in a legal, regulatory, policy, and government relations, advocacy perspective in pushing concepts around decentralization. Decentralization to us is, as I said, it's the key of the technology. It is what allows individuals to own the representation of whatever a token is, to truly own that. And if you think about that Web3 model, right, where now the contributors to the internet, the contributors to networks can actually own, the value of that contribution. That can't happen in a centralized model because it can be reversed, right? It can be changed. There's going to be a gatekeeper that controls access. There's a threat of deplatforming. There are take rates that would be subject to change, and so decentralization is the threshold, and there needs to be a high bar for it to ensure that, number one, again, the legacy investor securities protection laws that have very good intentions and have worked well, are obviated by a decentralized environment, but that there is also a strong marketplace with integrity, with customer protection, with federal oversight, with anti-manipulation and anti-fraud and pro-surveillance capabilities that can ensure that tokens and that value that accrues to individuals can be transacted. Right? And so, as we kind of think about, the primary policy pillars there, we're focused on decentralization. We're focused on the appropriate regulatory treatment of centralized firms, right? And we're focused on ensuring that the authorities have what they need to prosecute criminal activity, because isn't in anyone's interest for frauds and scams to continue to be perpetrated on the public. And unfortunately, that has happened.
Ruggers are going to rug. It's the way of life, I guess.
Well, I got to say, Frank, when I was at the CFTC, we prosecuted and filed complaints and had settlements on Ponzi schemes every week in the traditional commodities markets, right? It's not unique. It didn't all of a sudden just get. Ponzi schemes were not invented 10 years ago with the creation of Bitcoin or tokenization, right? These are legacy schemes done by unethical individuals that target areas that have the most enthusiasm and, in some cases, the most ignorance, right? And that happens in the gold and the precious metals marketplace. It's happened in the treasury marketplace. It happens wherever there is a potential to solicit investor funds that can be used improperly. And so it's never something that's good. It's something that I am seeing, and that we're all seeing the agencies prosecute, which is very positive. and doing so in a way that shows, I think, the advantages to law enforcement of the transparent nature of blockchains in actually, helping to investigate, uncover, and hold accountable those bad actors. And all of that is a benefit to the ecosystem in order to have it focus and have external parties focus on the innovation side of the technology.
Yeah, and a lot of those, issues that you're talking about kind of manifest in centralized organizations. The technology is inherently transparent, so it's kind of harder to, get duped, as it were, unless it is a specific technical breach or hack. But focusing on that second component that you kind of hit on in the previous question, looking at best practices around how centralized market participants in crypto should be regulated and monitored, it reminds me of something that SBF said when he was testifying before Congress about how a lot of the market data is public and open, and in a sense that almost makes centralized financial players in crypto, superior to their counterparts in traditional markets. Obviously, there was a lot more brewing under the surface than was apparent at the surface there. But what best practices would you implement, or do you think should be implemented for centralized brokers, exchanges? And I also want to get your opinion on, in many of these suits from the SEC, it kind of calls out the specific market structure of crypto exchanges, which is, very integrated, operating multiple types of businesses that traditionally in equities and derivatives aren't kind of meshed together. So I guess to be more to the point, what sort of best practices would you suggest, or policy prescriptions for centralized venues? And then maybe the second being the market structure in general. Is it problematic in the way that the agency has outlined?
Yeah. So, I think that there's.
I got to get better being concise.
No, that's fine. It gives me time to, get my thoughts together. I think that there's a huge disconnect right now between some of the centralized trading platforms that we see in the United States, and specifically, an entity like Coinbase, with entities that we see overseas that are in, different types of jurisdictions that may or may not have, robust regulatory frameworks, and often cases, do not, or operating, in a jurisdiction and services all other jurisdictions or many other jurisdictions in a way that is not compliant with those other jurisdictions' laws. So, I think, the first thing is that an appropriate registration scheme or framework for centralized trading venues is essential to level the playing field. Right? You have entities like Coinbase that have huge compliance departments that do robust analyses, surveillance, compliance work, that are public companies that have audited financials, and they're the ones that are being targeted, with enforcement actions for potential "quote unquote" securities violations. And yet, there are plenty of others that are operating overseas that may or may not be servicing U.S. customers, that are certainly servicing customers in other jurisdictions that don't have anywhere near that level of compliance. So there needs to be a framework that at least, a significant jurisdiction can agree to, which is one of the problems I think that exists in the marketplace right now in the United States that Congress is looking to solve. Right, that creates these outcomes that other countries could use for equivalence determinations or comparability determinations that can serve as a model for those countries to develop their own. We have MiCA coming online in the EU that's doing this. We have a new registration scheme coming online in the UK that is seeking to do this. If there is one that develops in the U.S., and we're hopeful that there is, given the progress in Congress, then those three jurisdictions will be able to discuss the differences and see if they can allow for registered entities in one to interact with the consumers in another. And so, that's a really important thing, just from the global nature of this asset class and this ecosystem. I can't quite remember where the rest of your question was going, if it was overseas based or centralized or.
Yeah, just in terms of the market structure, right? Is there any?
Oh, right. Yeah. So, I think I'm a little confused as to the positioning here by the SEC or others that are harping on this, because there are conglomerate business models that stretch across all aspects of financial services activity today. You have derivatives exchanges that also have a clearinghouse associated with them, right? You have futures commission merchants, which are the CFTC derivatives versions of broker dealers. You have those being combined with other regulated entities, right? You have entities that have both an SEC broker dealer license and a CFTC future commission merchant FCM license, right? And so they're under both jurisdictions and they operate, kind of simultaneously. You have legacy conflicts of interest in investment banks of, the sell side, research activity versus the M&A activity that Chinese walls exist to protect against, right? So, it's one thing to point out necessary safeguards for different business lines being combined in one entity, but it's pretty hypocritical to say that they shouldn't be, given everything else that already is.
Fair enough. Focusing, I guess, on some specific legislation, Senator Lummis and Gillibrand's revised crypto bill. What do you make of the bill, specifically the assertion that companies can determine whether or not their digital assets are commodities, regardless of decentralization?
So, I think there are a number of things. Let me speak broadly about kind of that first, which is that I think that this is a wonderful effort, and it builds upon the good work that these two senators have done, who are both very knowledgeable and thoughtful about this ecosystem, which is wonderful to see them dedicate so much time to learning about this, becoming experts in it, and then trying to craft solutions for it. And so, broadly speaking, that in and of itself is a wonderful thing. A lot of the ideas that they have put and policy positions that they have put into this could serve as components of any conglomerate bill that Congress chooses, to pass into law. And so it's a very valuable contribution from that perspective. It's valuable to have both the Senate have a bill introduced that's addressing these issues, as well as the forthcoming House bill from the House Financial Services Committee and the House Ag Committee. It's helpful to have both chambers introduce bills on these topics. I'm uncertain as to whether or not the Lummis-Gillibrand bill will receive a hearing in either the Senate Banking Committee or the Senate Agriculture Committee, just because usually it's the chairs of those committees that control whether or not those committees, will have hearings on bills or markup bills, and it's usually their own bills, that receive, that kind of attention. But regardless of any action or lack of action in the Senate, it is a very valuable contribution to the discussion. Many of the components could serve as a template for, again, what's included in an ultimate package, should Congress actually proceed here. And so I applaud them for that work. I think, getting to our discussion before, I think, we really believe that decentralization is a key threshold that needs to be achieved in order to escape from or be exempted from classic investor protection laws and regulations. And the reason, isn't to try to punish anything that's in the ecosystem at the moment, because we all realize decentralization is a process and takes time, right? And any new law that tries to create those thresholds needs to accommodate that transition. But if you don't have that, then our concern is that you really open up the market for some pretty bad consequences of entities that are trying to escape securities rules, but issue securities-like products.
All you need to do is slap labs at the end of your name, and then you're sufficiently decentralized. That's all you need to do.
Yeah, well, I mean, I hope not. But I think what we don't want to have happen, right, is to have a law come on the books that allows J.P. Morgan to underwrite $1 billion worth of tokens that are actually securities and then dump them on the marketplace, right? And a law that passes, that tries to create clarity for the crypto and token ecosystem needs to understand that as a potential consequence if decentralization is not a core component of what is viewed as a security versus a non-security and a commodity. And so, we think that there's a framework within Lummis Gillibrand that is interesting, given that it defines commodities broadly, which is appropriate. And even securities are commodities. I've had this conversation a number of times. It's not that something is a security or a commodity. Commodities are basically everything that are fungible, including stock certificates. But it's whether or not something is or is not a security that carves it into or out of the SEC's jurisdiction. And so focusing on how to ensure things are not securities, we think is the right focal point, and where a decentralized test, which is hard, right? Which is hard, and which a lot of different people have a lot of different views on. But we think that's the conversation that's most critical to have.
Yeah, so it's kind of like not all all commodities are securities, but not all securities are commodities, something like that, like a rectangle square type situation.
Yeah, I don't know what the Venn diagram looks like, but it's just because something is a commodity does not preclude it from also being a security.
What challenges or opposition do you think this bill or just any crypto bill that would be beneficial to the industry could face, especially with some crypto critics in Congress, as well as a seemingly skeptical Biden administration?
Well, I think you named the two, strongest points of opposition. We've seen nothing from the Biden administration that seeks to provide clarity. There was a lot of fanfare around the executive order that they've issued and a number of reports that came out, but with very little tangible benefit or follow through. Nothing has checked, the SEC's regulation by enforcement approach, or regulation by any means except regulation approach that is designed at this point. I think it's fairly easy to conclude, designed to kill this ecosystem in the United States. It's just a question of whether or not Congress has the consensus and the will to pass something and put it on the president's desk and try to, make this into something that needs to be signed into law, and overcome the opposition of very loud, but in my view, marginal critics in Congress, and to I think embrace aspects of the administration that are actually very pro the technology. I mean, I think if you talk to the foreign policy focused, the foreign policy focused folks and the national security, apparatus, there is a strong awareness as to the benefit of this technology and to the way that it can ensure that networks of the future remain open and censorship resistant, or are not easily capable of being controlled by adversaries. And it is well known in those communities that one of the battlefronts in the future will be networks. That control of networks by adversaries influence of networks by adversaries or the openness and censorship resistance, capabilities of networks in the future will be something that is a major battleground of foreign policy and national security. And that is why when you talk to folks in those jurisdictions, in those areas of policy expertise, they get it. Unfortunately, it feels like, they understand the benefits of it. And unfortunately, their positions and thinking are being overruled by domestic finance policy officials, either within the White House or Treasury, or certainly not having those individuals stand up and check the more authoritarian exercise of power by the SEC in an area that, again, does not fit into its regulatory history.
Yeah, well said. Well, I think we're at time, so I want to be respectful of that. Appreciate you coming on the program, and hopefully we'll talk to you soon.
Thanks a lot, Frank. Really enjoyed it. Looking forward to the next time.
Yeah, pleasure was all mine. And thanks again for listening. The Scoop will be back for you with another great guest. Have an awesome day.